Welcome back. Well, although we've been off for a couple of weeks, the Japanese economy has still continued to churn forward. There are a couple of disturbing reports that came out. Michael, the finance ministry reported their quarterly earnings about how much debt the Japanese economy actually holds. It's really tremendous.
It's a huge number, and anyone who's ever looked at finance ministry documents that the finance ministry bureaucrats push in front of you loses his or her mind. They go, this is hopeless, this is going to kill us all. And so the best thing to do usually is to ignore it. And luckily, Mr. Abe has been able to. And you only have to go back to 2010 when Prime Minister Khan, then Prime Minister Khan, came from out of the finance ministry, taking over the prime ministership from Hatoyama. At that point, he came in with all these nightmares in his head, and the first thing that came out of his mouth was, we have to raise the consumption tax. Boom! Just 2 months later, there's a House of Councilors election. The DPJ's chances of running the country are destroyed, and we had the deterioration in the DPJ's position that eventually led to its being thrown out of power in 2012. Everybody remembers that. And so any prime minister knows whatever the finance ministry is saying, ignore it, because otherwise it's electoral defeat.
Right.
But we do have an election coming up. It is another House of Councilors election, and these figures that have come out regarding particularly inflation and also what's happening in the currency markets is really, really making it hard for Mr. Abe to ignore economics at all.
Right. Well, the yen continues to strengthen, so the economy is really under a lot of stress.
So the strengthening of the yen, which makes absolutely no sense or at least would have made no sense when you heard about the imposition of negative interest rates on government bonding. This is what has happened in terms of the loss of the value of the dollar vis-a-vis the yen is inexplicable, and it's really hurting some of Japan's major exporters because now their goods cost more on international markets. And we saw, for example, Toyota with its announcement on its reduction in its profit.
Right.
Toyota is not just a marquee company; it's basically the
it's
major. Well, it's the major industrial force within a major region, Nagoya, which has done very well for many years. Nagoya is actually one of the few bright spots in the country. Most of the country is, if you go in a geographic sense, most of the country has been depressed for the last 20 years. Mm-hmm. But Tokyo, Nagoya, and you may say Fukuoka have been somewhat bright spots. To see Toyota going back into a lack of profitability, which it fell into after the great financial crisis of 2008, it's really a downer. Mm-hmm. Probably won't affect the election. There's only 2 months basically until the election is going to take place. The likelihood that the DPJ, it's now the DP, the Democratic Party, will make some kind of narrative out of that works in order to defeat the LDP in the election, not likely to happen. And I say that out of personal experience because yesterday I was actually at the press conference at the Foreign Correspondents Club of Japan, where the head of the DP, Okada Katsuya, tried to answer a lot of economics questions from journalists around the world and basically just didn't have a way of attacking the Abe administration on the economics front.
Well, they had a chance in Hokkaido just last week. The election, the LDP candidate did win in Hokkaido. That was an election that we were watching very closely.
Not a few weeks back, yeah.
Right. Well, to test that, the opposition had an opportunity in the Hokkaido elections on April 24th. And
they lost.
That's right. The LDP came out on top.
Yeah, but it was a close race.
It was close.
And it was well fought by the opposition. And we were thinking that there was a chance for DP to pick up 2 seats there. The one who was running up in the Hokkaido election was actually an independent, but supported by all of the major non-Osaka opposition parties. There was a plan, but it just didn't work, and we're probably not going to see the same thing. Well, they're going to try some things that are the same. They're going to do some things differently here and there. But as for a message on what's going on with Abenomics, as it's called, and where it's wrong, I haven't seen the opposition having a real sense of it. They have some idea. They know that Abenomics has inadvertently moved money from people who spend money, the poor, to people who save money, corporations and the wealthy. And that's exactly the opposite of what everybody wanted to have happen.
Right.
We want to have the spenders get the money and the savers to give it up.
Right.
But that's not the way it's worked out. We've seen during the Abe administration, the amount of cash that's on hand at corporations increased by 50%.
How do you explain that? I mean, that's...
Oh, it's simple. It's that they have been in 25 years of let's cut costs, let's cut costs, let's cut costs. We're not going to go for market share. The market's already saturated. All we can do is cut costs, save money, save cash on hand because we have pension responsibilities that we have to pay for. And they have such a strong mindset that even when they get a huge windfall, which they did, with
they sit on it.
They sit on it.
Right.
So that went from 272 trillion yen, which is more money than you need to survive Armageddon.
Right.
And it's gone now to 330 plus trillion yen just sitting in the vault of Japanese corporations. And also the Japanese wealthy, people who own stocks, and also own land, did it very well in the first years of Abenomics. They really cleaned up. Unfortunately, their propensity to spend is really low.
Right.
They talk about a wealth effect, but it's really insignificant as compared to raising the economic value of labor. You know, those people can really make a difference, and they have been left behind. And you would think that's easy. That's an easy narrative to play off.
Right.
But as it turns out, the DP has just not picked up on it.
Right. Well, it's not just the LDP that has suffered, I think. Abenomics, the Bank of Japan governor, has also, he's the one that's been moving the yen rate.
Well, he did nothing in the last Bank of Japan governor's meeting. They did nothing significant. And that really shocked the markets.
People are waiting for him to do something.
They were thinking that there's got to be some extension of quantitative easing, that he created he's been short-sheeting the markets for quite some time now. He's going against what expectations are, pulling out the bazooka when they don't expect it, keeping it in its box when they need it. And it's starting to really drive international investors out of the Japanese markets.
Right.
I mean, hundreds of billions of dollars have left Japanese markets over the last 6 months, just fleeing, thinking that there's no policy consistency, there's no policy theory, there's no sense of urgency, and there's a complete focus on the next election.
Right.
But there are some aspects of some people in the government who are very concerned. We're seeing, most famously, Finance Minister Aso has declared that intervention's on the table in order to stop the rise of the yen, which is received very badly in Washington, which is trying to sell an idea of a world where currency intervention doesn't happen, and that trade flows and currency flows are that markets control these things and that they run on remote control. Right. That there is not the mercantilist, hands-on form that's going on. Aso has maybe whether he got an okay from anybody else. Hard to say.
Hard to say.
But certain of the outside economic advisors, like Hamada, have chimed in and say when it reaches 95, the government has to step in.
Like they're not stepping in already. I mean, who is talking about Abenomics right now, even within the LDP? I mean, that's been shoved off because I think people have come to the realization that it just doesn't work. The first 3 arrows didn't work. The second 3 arrows doesn't work. We have to start gearing up for this election that's coming in the early summer. What's happening?
The thing is, the market mechanisms that would normally signal to everyone that things are bad, they've been short-circuited because we have such things like the GPIF buying into the falling market. As its own holdings decrease in value, it has a mandate to keep buying, even as its own because its own holdings are decreasing in value, it has a mandate to buy from the market and prop up prices. That's not its goal. but that's what it's doing.
And we're not going to find out how bad that is until after the election.
That's it. And the GPIF declaration will not happen until after the direct.
And doesn't that tell you this is a dark story?
And that's something that's going to come out,
right.
and it's going to look really, really bad because they have this idea that they have to have a certain percentage
right.
of their assets in the market. As the market value of the ones that they hold decreases, they will keep buying. It's the more you lose, the more you buy. Situation that is insane. Of course, if there was some kind of growth story that, okay, the market's going through a short period of time where it's going to be going down in value, but it's going to rebound because we have these growth initiatives going on, great. But they're growth initiatives that we've seen, that the dynamic engagement of the citizenry,
right.
100 million story, no one's buying that on the international level, and even on the domestic level, we're pushing it really hard, but you're not seeing it. Wow, they are really in just a lock mode and just trying to get to the House of Councillors election. And then the flood comes, I think.
Right. In this episode, we're just focusing on the dark clouds that are portrayed by the economy, by the strengthening yen, by what the Abe administration is doing about that.
Or not doing about it.
Or not doing about that. And this is a precursor to the upper house elections that will be in about 3 months' time. We're staying tuned to that. You should watch this as well. But there's going to be an awful lot that happens over the next
few weeks.
5 weeks or so. Stay tuned.